Yeah, so there are some factors at play here. So the internet's been with us for 20 years now, basically underwritten my investment career as we followed disruption from the early search engines of Google through social media, through digital videos, through digital video games, through to digital software, and on we go. And so from our point of view, there's 20 years of disruption there, and we do think it continues. So we do still like this area a lot, but we think there's more of a changing of a guard going on. And so the best way to think about this is, our analogy is a bit like the tennis. So it's February, it's Australian Open time still, just hopefully. And we've had the big four in tennis for a long time. The big four in tennis being, Djokovic, Nadal, Federer, and you could argue Murray. And the big four, we would say in technology, are Apple, Facebook, Google, and Amazon. And so while we think many of the big four will continue, some of them will definitely begin to wane. And what we're doing with our internet stocks at the moment is we are moving on from stocks like Facebook. To be honest, we're basically picking winners out of those big four, and we're using that money to really look at the next generation of players coming through, to look at the next generation of internet winners. Who could they be? Who could actually do this trick again? And so these are things like Spotify, these are things like Twilio, things in software, things like ServiceNow in software, things like HelloFresh in e-commerce. Those are the next big winners, we think, because we are your global growth manager, and we need to continue to find those next big winners. And so that's what we're doing with internet disruption today. We still like the theme, but it's about finding that next generation today. Yeah, so when we came into 2020, before COVID happened, we were, as you say, shooting a video like this one, and our biggest theme for 2020 was climate change. We thought climate change would become really important in the world. We thought that we'd reached a tipping point and that the acceleration of the decarbonisation of the planet would happen. Tesla was part of our investment thesis there. It was one of many holdings we held in that area. When COVID came along, we did worry. We worried that, as happened back in 2008 through the financial crisis, other concerns would mean climate went to the back seat, or climate concerns got overlooked. And actually the reverse happened. What happened is we seem to have one globally planetary pandemic issue, and then everyone started worrying about the next one being global warming. And so if anything, it's accelerated. People can now see that decarbonisation is going to happen across the world at a very quick rate, whether it's the US, whether it's China, whether it's Europe. And so all they've done with Tesla is basically pull forward all the demand in the valuation. And so what we probably would have thought would happen to Tesla over a 3 to 4 year period happened all in 1 year. Where do we sit today? Look, you can get the maths to add up for Tesla here. If you just think about the fact that it's 2% electric car penetration today, and it's going to go to 80%. It is. 20 years from now, every car that's sold is going to be electric. If Tesla holds its market share at the moment, which is 25%, then the stock is easily too cheap. We don't think it'll hold its market share. We think it'll lose its market share. And so that's the argument you have to have with Tesla. And so while it may have pulled a lot of that demand forward in 1 year, I think we'll still be talking about this stock 3, 5, 10 years from now. Yeah, so I'll just give you a simple analogy that we're using when we think about Tesla. So back in 2009, we were looking at the smartphone market. Smartphones, the iPhone came along, right? Smartphone came along and it was going to disrupt the way we look at phones. Apple was going to make it, and they were literally selling a phone for $1,000. And everyone's like, you can't buy a phone for $1,000, they're $200. And what happened is Apple came along and smartphones disrupted regular phones. Apple still only has 20% of the market, yet they make more than 80% of the profits, if that makes sense, in smartphones. And at that time, Apple was a 50 billion market cap, and the smartphone total addressable market was 500 billion. And so you thought they could penetrate smartphones and they would do quite well, and they would potentially go to a $250 billion company. Now, what actually happened is they became a $2 trillion company. So they became 4 times the size of their total addressable market because they added app stores, they added recurring revenue streams all the way through the company that allowed it to be revalued and allowed them to get higher margins. Tesla today sets up exactly the same way, or at least a year ago it did. 50 billion market cap, 5 times the total addressable market, 2.5 trillion, disrupting the regular car base. Now, obviously none of us know what's going to happen, but it does set up very much the same way. And so if they do manage to take that share as electric cars shift and hold on to that 20% share, then just think about all the things they can sell on top of that. And I think that's what the bulls are looking at, and it's definitely something that we've got in our numbers. Climate is now the biggest area of interest in the Munro funds today. It was very important to us last year, and at the start of this year, it's now the biggest area of the fund. It's nearly 20% of fund exposure. Why is that? Because we think the race to decarbonise the planet is basically the biggest opportunity we've seen since the internet. And the reason why we say that is because you are literally right at the start of probably one of the biggest S-curves that we're going to have in our lifetime. And so if you simply take on face value that Europe wants to go to zero carbon by 2050, China wants to go to zero carbon by 2060, the US, I'm sure, is about to announce a zero carbon target. Most states, countries, councils have a zero carbon target. Every single corporate we speak to has a zero carbon target. And so if you think about that, you basically got the entire planet all saying they want to go to zero carbon by 2050. And that's not emitting no more carbon, that's emitting zero carbon. Now we think conservatively that is going to cost $30 trillion over a 20-year time horizon, and we have seen numbers that are even higher than that. And so from that point of view, all we are doing here is following the money to find where that 30 trillion will be spent and who will be the winners. And we would just point out that it's not all going to be electric vehicles. So there will be more than one Tesla. You need to look at things like energy efficiency. You need to look at things like renewable energy. You need to look at things like battery technology. You need to look at things like charging stations, etc. And so from our point of view, we've spent the best part of 2 years now collecting a group of stocks that we think could all potentially be these next Teslas. And there we'd point to things like Ørsted in Denmark, which is the world's largest offshore wind generator. We'd point to Vestas, which is the world's largest wind OEM, or wind turbine manufacturer. We'd point to Samsung SDI in South Korea. We'd point to Alfen in Holland. We'd point to NextEra in the US. And so there are all these different areas that are going to be hugely focused on to get to this 2050 target. And the most important thing about this area, and the reason why we like it so much, is we are right at the start. We are right at the start. We are less than 2% penetrated in electric cars. We're less than 10% penetrated in renewable energy globally. And so this will run for years and years and years, and hopefully we'll be talking about it for years and years and years. And our job as your global growth investor is to get there first. Yeah, so let's just talk about offshore wind. Offshore wind's very simple concept. So currently, you know, we generate all our energy from fossil fuels. That has to go away. If you believe the target, it has to go away. Either we're not going to meet the target or it's going away. And probably it'll take longer, but it's going to happen. In offshore wind, there are companies that have this huge lead. They have secured the offshore tenancies required where you need to build the wind. They've secured the technology. They've got the know-how. And so they are effectively like an oil and gas super major back in the 1970s. It's like discovering BP when they discovered Iran. And so from that point of view, you're eventually investing in Ørsted. It's less than 100 billion in market cap, but there's just no reason why it won't, over a long period of time, become a next super energy major. And that's a simple example. And all the market's doing now, the more these targets get set in stone, the more the race to zero carbon gets more momentum behind it, the more the market's prepared to pull forward that demand and say this is going to happen and discount it in the share price. And we just argue that that process is closer to the start than the end. And we've seen it obviously happen a lot with Tesla, but we haven't seen it happen with all these other companies, and that's why we think it's so interesting.